All right, welcome in everyone. Welcome to another Financial Friday with Sanies and Equitable. Today's topic is all about Social Security. Sanies is excited to offer these sessions in cooperation with our corporate partner, Equitable Advisors. Joining us today is Kelly DeMay. Thanks for being here, Kelly. And just a quick reminder to everyone, the session is being recorded. We will save questions until the end of the presentation, but feel free to use the Q&A room or the chat room at any time and for general questions. But please know that the Equitable team is available at any time to answer your personal questions. You can find contact information for your regional reps at sanies.org. All right, I'll turn it over to you, Kelly.
Thanks, PH. So today I'm going to talk about Social Security. Social Security really is one of the greatest government programs that was ever invented or created. One of the interesting parts about Social Security is had almost no changes since it was created in 1935. And that's an interesting component or part of the program at the very least, the fact that it's had so few changes. But it's an amazing program and it's very detailed. So today I'm going to give an overview of the program, but I'm going to give a couple of disclosures first. First and foremost, how it applies to everyone is a little bit or can be a little bit different. Many individual factors can play into Social Security, and there's different parts of Social Security. I'm going to get into a high-level overview of that. So what somebody did doesn't mean that that dictates what you should necessarily do per se. That's up to somebody's individual plan. As we go through this, please feel free to ask questions. Also, as we go through this, in the top right corner of every screen, there's going to be a QR code. And that QR code goes directly to the Sanies members at equitable.com email address. So if you have some questions that you're a little bit hesitant to maybe ask in front of or to the group, please feel free to scan that QR code and then you can reach out to me privately and directly. And we'll either schedule a time to meet or I can answer your questions from there. So just a little bit of an agenda today to start with, understanding the value of Social Security and the importance of it, different types of Social Security benefits. We often associate Social Security benefits with retirement benefits, and where that is a lot of it, it's not all of it. There is more that goes into it than that. Number 3, factors that impact your Social Security benefits. 4, how Social Security is taxed. Different strategies for collecting, and then resources. So first, understanding the value of Social Security. So in 2020, 65 million Americans received $1 trillion with a T, trillion dollars of Social Security benefits, and 9 out of 10 people over age 65 are receiving Social Security benefits. So obviously the first question almost everybody asks me is, Kelly, is Social Security really going to be there for me? And the short answer is yes, it absolutely will. Because when there's this many people collecting this much in benefit, there's no way any government can just shut them off. Another statistic not shared on this slide, of 70% of people collecting Social Security, if they were not collecting Social Security, 70% of people collecting would actually be on a different government program, which is essentially welfare. So some food for thought. The reality is people are going to be on one government program or another. It's all the same dollar to the US government. So yes, Social Security is going to be there. Now, for myself, I'm 41. Will it be there for me in the same way? It's probably going to change for my generation, but I don't think it's going to change for the older generation. There's too many people relying on the system. The other thing is the system is so enormously big. A very small change makes a huge difference. And I'm going to talk a little bit more about that. So what are the types of Social Security benefits? So like I mentioned, typically we know Social Security benefits in the form of retirement benefits. That is calculated based on someone's work history. What I mean by work history is in order to be eligible to collect Social Security, you have to have 40 quarters or 10 years of earned income. Now, that's an important part. Like I always use my dad as a reference point. My dad was a business owner, and though he was a successful business owner, he also was successful in navigating the IRS and taxes, and he really never had earned income. As a result of that, he was not eligible for Social Security for himself. He did not have 40 quarters of earned income or 10 years because he claimed a loss on his taxes every year. Now, I don't work for the IRS, and they worked with a CPA, but that's just how my parents managed the business that they owned. The more money you make, the more you're going to get from Social Security. The less money you make, the less you will receive. So it is based on your earnings. But unlike the New York State pension, it's based on the highest 35 years of earnings. This is a big factor. If you're considering retiring maybe at 55 with 30 years in, 56 with 30 years in, you probably don't have 35 years of earnings and you're going to have zeros in there as your pension does not count as earned income in the calculation. Is that a good thing or a bad thing? It is what it is. The formula is what it is. But when people ask me, Kelly, will working one more year have that big of a difference? It can, and it does have a huge difference, in part because of Social Security, because you now have another year at one of those highest earning 35 years, and you're getting rid of either a zero or a lower income earning year. Another factor in Social Security is a spousal benefit. So, going back to my dad didn't earn Social Security, he didn't pay into Social Security. He claimed a loss every year. But my mom, she leveraged Social Security. She was a school principal. So my dad, because they were married for more than 10 years, got 50% or half of my mom's benefit. It did not impact her benefit. She still got the same amount. He just got half because they're married for 10 years. This is a big, big factor and an important stipulation. And one thing I want to say, and how fortunate you are in the state of New York, is not every state are you a school employee and also get Social Security. Many states you get a pension or Social Security. New York is somewhat unique and you get pension and Social Security. And it's really a game changer financially. This can also, in some cases, apply to couples who are divorced. And then there's survivor benefits. Survivor benefits are available for people whose spouse has passed away. So that's another factor or function that Social Security covers. So let's talk about how Social Security works. So my first piece of advice to all of you is to go to the website ssa.gov and create a username and password. I'm here to tell you, creating a username and password will not be easy. It's the Social Security website. It's got to be really secure, and they're going to make it really secure. You have to do like a face picture of yourself from your camera phone. You have to input your driver's license. Like there's a lot of hoops to jump through, and it should be that secure because you don't want someone messing around with your Social Security benefits. So please be wary. Make sure you note your password because if you forget it, it's really a runaround to get it reset. So if you have not done this, you should absolutely do it. I log into my Social Security probably at least 4 times a year just to check and make sure that things are looking as they should look. The Social Security website is literally one of the best and most effective websites that is designed or built. And the reason being is that it was designed for people who are a little bit older and maybe not so tech savvy. So food for thought. On the right-hand side, we've got a Social Security statement example, and it's going to show in that bar graph what someone would receive on a monthly basis if they're going to collect Social Security at different ages. Effectively, the longer you wait, the more you're going to receive. Now, the catch 22 to that is the longer you wait, the longer you have to live to make up the fact that you are not collecting. What is right for you? It depends on many, many factors. So just be mindful of that. That's something that in a financial plan, we do a pretty thorough deep dive on. So let's take a look at how Social Security is calculated. So, like I had said, Social Security is determined based on the 35 best earning years of employment. In your Social Security statement, it will have an overview of your earnings record. And if you notice in this example, where it says earnings tax for Social Security, you can see an amount, and it is aligned earnings tax for Medicare up to a certain point. And then you're going to see that the numbers differ. And that's because there is a cap on the earnings tax for Social Security. Once you get to a certain income level, they stop taxing your Social Security, or your income isn't taxed in the same way anymore once you hit a maximum, and that adjusts every single year. On the right-hand side, it will indicate what are you going to receive as a monthly benefit, and then what is the value of waiting potentially to collect. To give you some perspective, for every year you wait to collect between 62 and your full retirement age, which for anyone born after 1960 is age 67, you will get a 6% increase in your Social Security benefit for every single year you wait to collect. Now, people are like, Kelly, 6%, is that a big deal? Well, and I always combat that with, well, when was the last time you got a 6% raise from your employer? And they say, it's a big deal. Yes, it's a big deal. And then from 67, or your full retirement age, to age 70, you get an 8% raise for every year you wait to collect in that time frame. Now let's talk about full retirement age. This is very confusing for people because people will say, I'm going to collect my Social Security at 62, 65, 66 in 2 months, 60, and that's because they're going off of a lot of different things they've heard, but it applies to everyone pretty individually. Like I had said, if you were born 1960 or later, your Social Security full retirement age is age 67. If you were born 1943 to 1954, your Social Security full retirement age would be 66, and then you add 2 months for every year. So, for example, if you were born in 1955, your full retirement age would be 66 and 2 months. 1966 would be 66 and 4 months. So you're going to add 2 years for every year somebody was born between 54 and 1960. And then for those of you who were born in 1937, for you it's 65, but I'm going to guess that those ships have sailed. So that's important. You've got to know your full retirement age. This is different than getting Medicare at 65. These are two separate things in this conversation. If you were to collect at age 62, you get a reduction in your benefits. So from your full retirement age, let's say your full retirement age is 67, the difference between 62 and 67 is you're going to get about a third as much, or 2/3 as much money at 62 as you would have gotten at 67. Now, every day of my life, I hear people say, Kelly, I'm taking my money as soon as I can. And it's like, well, that's probably not wrong. I mean, Social Security is an expensive system. You pay a lot of money into it. Everybody does for a long time. You want to get your money out of it. That's a pretty reasonable thing. But there's some stipulations associated with that that are pretty sensitive that you got to be mindful of. 67, or for anybody born after 1960, that's age 67 is the full retirement age. And then for every year you wait to collect between 67 and 70, remember you get that 8% increase in your benefit. The difference in somebody collecting at 70 versus 62, if somebody waits till 70, they get almost twice as much money as they did at age 62. So it's a pretty significant increase, at least as far as I'm concerned. I think that that is not a small amount of money, or at least it's not to me. Now, cost of collecting Social Security early, I just talked a little bit about this. In the event you want to collect as early as you can, which is age 62, you'd collect about, like I said, about 75% of your full retirement age benefit. Um, and then for every year you wait, you get a little bit more. So you can see that the increase over time. When should you collect? I don't know. It depends on how long you're going to live. If you have a crystal ball and you can tell me how long you're going to live, we will be absolutely able to determine exactly when you're going to be able to collect. However, that is a hard thing to predict, but that's really the determination. Now, the longer you wait, like I said, the more you get. So if you wait till age 70, you're going to get, like this indicates, a pretty significant amount of money more than you would have had if you collected at your full retirement age. Okay, so let's talk a little bit about the spousal benefit. So maybe your spouse maybe did not work, or they were like my dad and they had a business and they claimed a loss every year. If you were married for at least 10 years, your spouse is eligible for half of your benefit or all of their own benefit, whichever is higher. Now, I will tell you, like some people's spouses maybe make less income, maybe make significantly less income, and people will say, like, half of my benefit will be higher than all of my spouses. It's usually not the case, quite frankly. As long as a spouse has earned income for those 35 years, oftentimes their full benefit is going to be greater than half of the spousal benefit. Social Security gives you the better of the two. So it's really not worth splitting hairs over. Like they're going to make it right either way. But this is a pretty nice benefit that sometimes, like my dad didn't even know this existed. He knew he didn't contribute to Social Security. He was well aware of that. He knew the game he was playing. He had no idea he was going to get half of my mom's, which was a good amount of money because my mom was a school principal. She contributed a lot to the system and worked for a long time. So, food for thought. One factor is with the spousal benefit is the maximum benefit is half of the full retirement age, but it's based on when the higher earning spouse collects. So let me give you an example. Let's say the higher earning spouse is age 60 and the lower earning spouse is age 62. And somebody will say, oh, they'll collect half of my benefit. It's like, well, they could when you collect. That's when that turns on. So just so you know, it is based on the person who is the higher earner, half of the spousal benefit. Just because the one spouse is of age does not mean that they can just collect half. The third element is survivor benefits. So survivor benefits are in the event that one of the spouses pass away, you can receive the deceased spouse's benefits, but you have to be at least 60 years old. So I just had a scenario with clients of mine where unfortunately husband passed away. They had been married for 30 years and he was 56. She will collect a survivor benefit, but not until she is age 60. So, and they were married for 9 months prior to the spouse's death, but there are some exceptions for that related to accidents. So, just food for thought, like this is another benefit where if you've had someone pass away, you can collect the survival benefit and then later on collect your own retirement benefit. So, it's kind of an attractive system. If you're divorced, this impacts this. You have to have been married to your former spouse for 10 years and be unmarried, and both you and your ex-spouse are age 62 and divorced for at least 2 years, you can still collect up to half of your ex-spouse's benefit. It does not impact the ex-spouse. Nobody's Social Security is impacted by this, but it is an additional part of this or feature, if you will. So let's talk about some other factors impacting Social Security. And as a reminder, you've got that QR code in the top right corner if you have a question you'd like to send or you'd like to schedule a time to meet. So life expectancy. Now, I do another presentation from time to time on like it's called the 8 myths of finance. And the first myth is you're going to live a lot longer than you think you will. So the reality is, how long of a chance do you have to living to know when to collect? You're going to live a lot longer than you think you will. I realize it doesn't apply to everyone. I realize people have pre-existing conditions or circumstances that come up, but this is a really, really significant thing. Social Security does a phenomenal job of adjusting for inflation. Your pension does not. So when we're in a highly inflationary period, Social Security is pivotal in that equation because Social Security will adjust with inflation. Your pension's going to stay the same. And that's a little bit of a deeper conversation. If I have time, I'll talk a little bit more about inflation because that's the most significant risk to all of this. But the reality is, if you're married, one of the two of you is going to have a chance of living till age 98. That's a big deal. That's a big deal. So you got to be mindful of that. Like, there's a good chance that people are going to live for a long time and they're living longer and longer, especially with the advances in modern medicine. Okay, let's say you say, you know what, Kelly, I hear what you're saying. Great, I'm collecting at 62. And I say, wonderful. Let's pull the ripcord and do it. If you were to collect at age 62, just be mindful. You are limited on the earnings you can have in earned income. Your pension is not earned income. That's fine. Earned income is maybe you have a part-time job, maybe you do some consulting work. If you are 62 and collecting Social Security, you cannot make, based on last year, more than $23,400 a year. If you make more money than that, Social Security is going to penalize you 50% on your earnings over 23 grand a year. Basically, Social Security says you want to retire at 62, you go right ahead. However, you've got to be pretty darn retired. This isn't I'm kind of retired, but I'm kind of going back to work and no, 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 no. You can only make 23 grand a year. And it's not a lot of money. Once you reach your full retirement age, which for more closer people is 67, that's when you can really, there's not a cap on what you can earn. Once you reach your full retirement age and beyond, there is no cap. You can make $1 million a year. Doesn't matter. It's not going to impact your Social Security. When you apply for Social Security, you do through that SSA.gov website. I find the application to apply for Social Security is really, really simple. If in the Social Security system you have a situation they identify as unique, they will not let you process an electronic application and they will make you call in. It's not bad to call in. I know people are like, oh my God, I got to call the 1-800 number. It's fine. It's not bad. But if you have a situation that is going to impact your benefit, they will make you call in. You cannot apply online. For the majority of Americans, probably 85 to 90%, you can complete the application online. It takes about 15 minutes. Let's talk about Social Security is taxed. Yes, Social Security is taxed for the most part. So there are 3 categories for Social Security taxation. Either none of your Social Security is taxed, some of your Social Security is taxed, or most of your Social Security is taxed. For the people on this call, you are going to be in category 3 where most of your Social Security is taxed, and that is because you have a pension. So because you've got pension income, that's going to impact the taxation. You're going to pay more in taxes. This is not a bad thing. You would much rather have the pension than not have the pension and pay less in taxes. This is a first world problem. Kelly, I pay a lot in taxes. It's because you make a lot of money. This is a good thing. Welcome to the United States. Glad you came. This is a positive thing, not a bad thing. But Social Security is pretty tax favorable for everyone. So 15% of your Social Security benefit is completely tax-free. For most of you, you will pay your regular federal income tax rate on 85% of your Social Security benefit. That is not 85% in taxes. That is 85% of the benefit is subject to your regular tax rate, which might be 12, 22, or 24%. 15% is tax-free, and then all of it will be fully New York State tax-free. You will not pay any New York State taxes on your Social Security. People often say to me like, oh my God, I'm going to move to Florida in retirement because I'm paying so much in taxes. And it's like, well, it's not really that bad. Like you pay school and property taxes in New York, but you don't pay Social Security income tax on your Social Security income or your pension income or some of your retirement account distributions. So all things considered, relatively speaking, it's decently tax efficient. So this gives a visual of what I just explained, where if your income is at a certain level. So in this example, if you make over $44,000 a year and you file your taxes married filing jointly, you pay taxes on 85% of your Social Security benefit. That's going to apply to, like I said, probably almost everyone on the call. And that's a good thing because you make good money. So with that, I hope you have some insight in understanding fundamental rules of Social Security, recognize your options, and then you got to make sure you work with someone to talk through this. Social Security is one of the toughest things. Like it's a really significant amount of income in retirement that you should maximize for your situation. But there's a lot of people who go make choices based on what their friends did or family members did or what they read in AARP magazine. Sometimes I have people tell me they watch YouTube videos on the right thing to do. I don't know how any of those pieces factor in someone's individual situation, but teach their own. Every situation is unique and different. You should get a plan, whether your own financial advisor or through your complementary benefits through Sanees, as you get a complementary financial plan to evaluate what's the right thing for you. So with that, thank you. We've got about 3 minutes for questions if anyone has any questions.